Every year at tax time, millions of Australians either miss deductions they're legally entitled to or claim things they shouldn't and end up attracting unwanted attention from the ATO. And the frustrating part? Most people don't even realise they're getting it wrong. In this video, we're breaking down some of the biggest deduction categories Australians claim every year, including work-related expenses, working from home, and car and travel deductions, based on current ATO guidance available at ato.gov.au. And stay until the end, because in part 2, we're covering some of the most misunderstood deduction areas in the entire tax system, including clothing claims, self-education expenses, charitable donations, and the expenses Australians still wrongly try to claim every single year. Let's start with the 3 rules that apply to every deduction, no exceptions. Before we get into specific categories, there are 3 rules from the ATO that apply to every deduction. No exceptions. Rule 1. You must have spent the money yourself and not been reimbursed. If your employer paid for it or paid you back for it, you can't claim it. Simple. Rule 2. The expense must directly relate to earning your income. Not generally useful for work, not vaguely related to your career, directly related to earning your assessable income. This is where most incorrect claims fall apart. Rule 3. You must have a record to prove it, usually a receipt. The ATO requires you to keep records for 5 years from the date you lodge your tax return. In most cases, without adequate records, you won't be able to substantiate your claim, though certain thresholds and exceptions do exist for specific categories, which we'll cover as we go. Every deduction we discuss today must pass all 3 of these rules. Keep them in mind throughout. The broadest deduction category is work-related expenses, things you buy or pay for that directly relate to doing your job. This includes tools and equipment you use specifically for work, things like a tradesperson's tools, safety equipment your employer requires, or professional equipment specific to your occupation. It can also include a bag, but only if that bag is primarily used to carry work-related items like a laptop, client files, or protective gear. If the bag is used for both work and personal purposes, you may need to apportion the claim based on the work-related portion of its use. A bag used purely for personal purposes would not be deductible. Professional subscriptions and memberships to industry bodies directly related to your current job may also be claimable. For items that cost $300 or less, you can claim the full cost immediately in the year you buy them. For items that cost more than $300, you claim the decline in value of that item over its effective life. This is what the ATO calls depreciation. You cannot claim the full purchase price of a more expensive item in a single year. And critically, if you use something for both work and personal purposes, you can only claim the work-related portion, not the full cost. Working from home deductions are one of the most claimed and most incorrectly claimed categories every single year. And this is an area the ATO regularly focuses on during compliance reviews. At the time of recording, the ATO offers 2 methods for calculating your working from home deduction. The first is the fixed rate method, which at the time of recording allows you to claim 70 cents for every hour you worked from home. This single rate covers electricity, gas, internet, phone usage, and stationery. Because those costs are already bundled into that hourly rate, you cannot claim them separately on top. Claiming those costs twice is one of the most common incorrect claims the ATO sees every year. On top of the fixed rate, you can separately claim the depreciation of work-related equipment, things like a laptop, monitor, desk, or office chair, because those items are not covered by the hourly rate. To use the fixed rate method, you must keep a record of the actual hours you worked from home for the entire year. A timesheet, roster, diary, or spreadsheet all work. The ATO no longer accepts estimates or a 4-week representative sample. Actual hours for the full year is required. You also need at least 1 bill for each type of expense the rate covers. The second option is the actual cost method, where you calculate the real work-related portion of each individual expense. It requires more detailed records, but may produce a larger deduction depending on your circumstances. Always verify the current rate at ato.gov.au before lodging, as rates can be updated each financial year. If you use your own car for work-related travel, you may be able to claim a deduction, but this single rule surprises people every tax season. Your regular commute from home to your usual workplace is not deductible. The ATO is clear. That journey is considered a private expense, not a work expense. Even if you couldn't earn your income without making that trip. Work-related car travel that may qualify includes driving between two separate workplaces, visiting clients or suppliers, traveling to pick up work supplies, or attending work-related conferences or training. At the time of recording, the cents per kilometer method allows you to claim 88 cents per kilometer for work-related travel, up to a maximum of 5,000 kilometers per car per year. This rate covers all your car running costs: fuel, insurance, registration, servicing, and depreciation, so you cannot add those costs separately on top. Under this method, you don't need individual receipts for car expenses. However, you do need records showing how you calculated your work-related kilometers. A diary or logbook is the standard approach. If you drive significantly more than 5,000 work-related kilometers per year, the logbook method may be worth considering, as it has no kilometer cap. That method has more detailed record-keeping requirements, and we'd recommend speaking to a registered tax agent to assess which method suits your situation. Always verify the current rate at ato.gov.au before lodging. So those are some of the biggest deduction categories Australians claim every year, and the rules the ATO expects you to follow if you want to claim them correctly. But here's the reality. Some of the most commonly misunderstood deductions still haven't been covered yet. In Part 2, we're breaking down clothing and uniform claims, self-education expenses, charitable donations, and the expenses Australians still wrongly try to claim every single tax season. And some of those mistakes are exactly the kind of things the ATO regularly focuses on during compliance reviews. So if you want to avoid overclaiming while still making sure you're not missing legitimate deductions you're entitled to, Part 2 is the one you need to watch next. Subscribe to ClearCents AU so you don't miss it, and we'll see you in Part 2.